Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the Forex market. So yesterday we got the statement and the press release from Jerome Powell. So as usual, it was a lot of noise from nothing. So actually we've heard nothing really new. The one thing that may be worth to mention is Jerome Powell actually briefly mentioned the possible changing of the quantitative tightening program. So it's concerning the size of its program, monthly bonds buyback or selling out of the balance, if we speak about the quantitative tightening. So that probably was just the only new thing with the rhetoric of the Jerome Powell. We will take a look in details on this speech in the weekend as usual, but you can see the result on the markets. So mostly I think that it was purely speculative activity, as we've already talked about this many times, that fundamental background statistics that we have from the United States and overall political situation, it doesn't suggest some really dovish position from the Fed. Once again, just to mention it and remind you what we talked about in the last weekend, that Fed policy right now is becoming the purely political tool. It depends on some political elites camps inside of the United States and what they actually have decided concerning the United States economy, Bretton Woods system, and what the next step they intend to do. From that standpoint, Fed will act. So neither some statistics nor some other public news, public moments will make impact on the Fed position and Fed activity. So it's totally governed by the political elites inside the country, and their policy will depend purely on the strategy that these elites have right now. So as a bottom line, I wouldn't overestimate the recent statements from the Fed, and currently I wouldn't rely too much on some dovish tone that we've heard yesterday from the Jerome Powell. I think that it will be forgotten very fast. Even from the technical point of view, if we'll take a look at the euro currency, yes, our stops to the upside has worked nice, as on the euro currency. I could show you on the cable. So this is what has happened based on our Gartle's 222 on Great British Pound. We have great upside action here as well. This setup mostly is done. As I said, this is only for one session, only for those who trade on intraday charts. So here's mostly is done, and it looks nice, but in general we have to return back to the major background, and major background tends bearish. We have strong bullish pattern on the dollar index. I remind you every time about this. And even on the daily chart on the euro currency, we still have the bearish trend. So from that standpoint, we have to treat this upward action on the Fed meeting as a retracement. This is not the continuation of this ABCD pattern, at least by far. At least we have the bearish trend, but this should be treated as a pullback on the downside action, so downside trend. That's how correctly we have to treat it in the current situation. On futures charts, today could be a very interesting moment, and we have to consider it. I call this type of performance as the 2 days grabber. So it looks different. In fact, by the theory, we do not have the purely grabber, because we have changed the trend in one direction. It was yesterday, and the next session we have the changing of the trend in the downside direction. But if you combine this in one candle, you could see that here it absolutely differs nothing with the normal and common grabber. That's why I call it as a 2 days grabber, and if market will close today somewhere in the current area, we could treat it also as a bearish grabber on the euro currency on the daily chart. So just let's keep watching what will happen in today's session. And that's what about the daily chart. On the 4-hour time frame chart, I do not see something really special, so you could see the pullback once again from the XOP and 50% support that we have discussed, this upper direction. And currently, for today and tomorrow's sessions, I would focus on this sharp reversal that we have currently on the euro currency. Particularly speaking, I was watching for minor retracement here, either to the 109.08 area, 109.20 as 50 levels, and maybe it makes sense to consider possible taking the short position against this stop, because if we will get the grabber, that will be already with this trade, so with this trading setup, if we will have the position. Second, currently once the downside action is started, we are dealing with the daily direction, daily trend. Why this pullback would happen? Actually, we have great thrust up, and in fact we have the burn body trade. So if we take a look, we have few closes below the moving average. Here's, I suppose, the same 50% support, and in fact we have even not burn body, we have the double ripple, guys. Take a look carefully. Close below, close above, close below, and collapse. So 50% support. The double ripple actually already is done, but let's do not call it as a burn body, but still we have the strong thrusting action here. We have first downside motion, and it means that this momentum still exists, and that should push price higher to give us kind of the retracement to the high standing level. That's why today I would consider these two levels for a possible taking the short position on the euro currency with the major direction that we have on the daily chart. Besides, considering taking the position around these levels provides very small risk, because actually this will be our invalidation point on the full time frame chart and on the daily chart, just because we suggest a potential grabber, logically to use its stop as a potential invalidation point, because actually if euro is still bearish and context is still valid on the daily chart, this setup should work. So forming of the grabber, minor pullback, and our continuation. So that is normal, common price behavior in the current circumstances, this type of the circumstances. If something different will happen, market starts climbing higher, returning back above the stop, trying to break it up, that will tell something, but this probably already will happen in the next week.